Hey, it's John Terry with Vision Advisors, and I want to jump in real quick because we've got a brand new product opportunity that's just been released by F&G, and it's something you need to know about. This is an exciting opportunity to look at something unique and different in the FIA space. I think is going to get your attention. In fact, I know it's going to get your attention. So much so I reached out to Luke and I said, Luke, I've got to get you on the calendar as early as possible. This product released on Monday of this week. This is June the 24th, and here we are on Thursday morning having an opportunity to be one of the first groups to get a chance to see this solution. We're pre-recording this so we can push it out and give you an opportunity to watch this at your convenience over the next day or so, but we are ready to rock and roll here at Vision to help you have an opportunity to engage and use this solution where it makes sense. So, Luke, without further ado, thanks for taking some time to jump in real quick and give an opportunity to up-level our audience on this unique FIA solution and where it fits.
Hey, thanks so much, John. Appreciate the introduction and the engagement on our new product. And I'd be foolish if I didn't begin by saying thank you. So as John said, my name's Luke Christensen. I'm National Account Vice President with F&G here. And I know I've worked with several of you there within Vision. But I've got to start by saying thank you. You know, we've had a really strong partnership with you. Thank you for your business, your partnership, and also your time and listening to us today. So our business at F&G is booming, and it's built around strong relationships with folks like you. So can't thank you enough. We appreciate everything you're doing out there to grow our business. I'll just start by saying a couple quick things about F&G and update you there and just jump right into the product. So last year, we say we had an unprecedented year in a good way. We were up 20%. Our peers on average were down 20%, so 40% swing our direction. We climbed the ranks last year to be the #3 seller of FIAs in the independent channel, and I just learned that through the first quarter, we're actually the #2 seller of index annuities in the independent channel, edging out Allianz. So thank you for everything you're doing to help continue our growth. We've been really, really busy. We've hired this year, just alone this year, over 100 and some people year to date, over 250 people in the last 17, 18 months. So we've been on a hiring spree, and to think all those people have been with the company virtually is just incredible. We've launched several new products here in the last year and a half. We've got a new great compensation program for all of you top advisors out there. We just launched trail commissions. So we've been extremely busy. But with all that being said, I think we do have something unique and something different. And we finally built a different chassis for an index annuity. And you're going to see some really incredible growth rates on this product. In fact, 2 to 2.5 times higher the typical S&P 500 caps and par rates that are out there. There's just simply no other product out there like this one. It's unique, it's innovative, it's very, very competitive. And like John, after you hear about it, I hope you're going to have the urge to talk about it and be as excited about it as we are. We're just thrilled. So I'm going to first tell you why we decided to build the product, because it's really important to know why. As it turns out, we've always solicit feedback when we build new products from distribution partners. As it turns out, our distribution partners, you guys, have helped us uncover there's really something out there that's been missing within our space. So we're going to dig into the significant advantage of our design, why it's not just good in the current marketplace you're operating, but hopefully opens up the door to different marketplaces and demographics for your business. A new risk profile for the clients you may be working with, and even objectives that they're looking for. So we truly think this is going to open up new doors for you. Good news is you can continue utilizing the great F&G products you're using today. I think this should actually complement and add value to what you're doing. And then we're going to dive into exactly how Dynamic Accumulator works and exactly how we can offer such competitive rates, 2.5 times what's out there on S&P. Here's what we heard. Top answers on the challenges today when it comes to products, index annuity products, insurance products in general. Interest rates are so low. I mean, 10-year Treasury dipped to 50 bips last year. It's hovering around a 1.5. Nothing to get exciting about, especially when that's a common benchmark for companies to build products. CDs, you're lucky to lock in 1%. Bond ladders just aren't given the value or the solution that they used to. even though the market's been up, it's had some pretty wild and dramatic dips and ups and downs. And a lot of economists agree, even though it's up with one of the longest and best bull markets, a correction's bound to happen at some point. A ton of hedge fund managers and economists are talking about that. Also, housing bubble, there's a burst going to happen there. And then, not to mention a current administration, we got new tax regulations being enforced and proposed. That's a big, big topic. Regulatory landscapes evolving, not to mention a pandemic. You add all of it up, it's just been a steep uphill climb to find growth potential without being willing to risk a significant amount of your money. So risk reward spectrum, everybody's seen one of these. You got cash, CDs, fixed annuities, most conservative, lowest risk, bonds kind of in the middle, equities, stocks, mutual funds, ETFs, biggest risk, most aggressive vehicles to park your money, right? Then switch into annuities. You got MYGAs, index annuities, RILAs, and VAs. So RILAs, if you're not familiar, or registered index-linked annuities, are a rapidly growing annuity product. For anybody unfamiliar, they're really the newest rage in the variable annuity world. They're less than 10 years old. That business is exploding. They grew 41% last year to $24 billion. Index annuities still do a lot more at $70+ billion, but variable annuities are going down, and they're really going into these RILA products. So essentially at their core, clients are still risking their premium each and every year, but it's a set level of risk, right? Maybe 10%. Don't confuse downside exposure with downside protection with a RILA. With a RILA, a client's premium is still 100% at risk, but there's a greater reward available on those products, a lot higher upside potential. And they've got strategies really similar to what we offer on the FIA side. Point to points, cap rates, par rates. They use the S&P 500 index and Russell index and other index options that many of you are familiar with and have used. So like I said, that business is just exploding. But when you add all that up and you think about it, it's pretty clear. Clients don't like the idea of risking all their money at once, but yet they still want that opportunity for more upside potential than what's out there today. So we took a look at all that and we thought, is there an opportunity to blend an index annuity and RILA, perhaps a brand new product category and class? So I'm really excited and proud to offer you the Dynamic Accumulator from F&G, and we're coining it a fixed index linked annuity, or a FILA. So you heard that right. I didn't say RILA or FIA, I said FILA. So before we dig into it, first comparing an FIA to a RILA. Basic feature of an index annuity, the best feature, principal protection, right? You never risk a penny of your premium. Zero is your hero. Yet you're able to participate in the upside of the equity market. Some people call it the power of locking in gains, or annual ratchets, or annual lock-ins. Index annuities, of course, are not registered. You don't need a securities license to sell them. RILAs, on the other hand, they don't protect your principal. You don't lock in your gains each year. However, more upside potential available because you're willing to risk your hard-earned dollars. They do require a securities license and a broker-dealer to sell them. So how's a FILA work? It's actually really easy. At its core, you get the best of both worlds of an FIA and a RILA. You get the same principal protection as an index annuity. Our FILA doesn't risk a penny of your premium, yet we have the upside potential available much more similar to a RILA or an IUL. And how we do that is each and every year, we give the client the choice, dial up their potential, or conversely, dial up their protection. That decision is really in the hands of the client and the advisor each and every year. And it's as simple as that. It's non-registered, so you don't, it's a fixed product, has minimum guarantees, it's approved by most of the states, has standard non-forfeiture language in it. Therefore, it qualifies as a fixed product. It doesn't require a broker-dealer to sell it, just an insurance license, and you get to sell this product through Vision Advisors. So we're excited about that design. So I think some of the things I just said are worth repeating because this is different and unique. Just like an FIA, I'll repeat this. Dynamic Accumulator's premium, 100% protected from any market downturn or loss. It is a no-fee design, so there's no rider fee, there's no strategy fee, there's no product fee. You deposit $100,000 of premium. Worst case scenario, after 10 years, you get your 100K back. Okay. Again, it can be sold just with an insurance-only license. It does not require a Series 6 or a Series 7 or 65. Now, unlike an index annuity, okay, much more like a RILA, our gains can be leveraged each and every year. And you're going to see those here shortly, but they're very, very attractive rates. And we're able to give way better, premium protection than a RILA with this product. So let's just take a couple quick examples comparing index annuity performance to a FILA's performance over side by side over the last 10 years. We took a look at a lot of different FIAs, and on average, an average typical index annuity on $100,000 of premium would have ended up being about $130,000 over a 10-year period. So a 3% rate of return. Reasonable average for an FIA, right? Dynamic accumulator, using the same time period, same $100,000, same S&P 500 index, we would have ended up with $170,000 or $40,000 more in gains, 40% more growth, okay? I'm sure you're saying, well, of course that looks good. Those were mostly great years. You can kind of cherry pick any time period you want, make something look good, right? So let's take it a step further, okay? Here's a scatter plot. We ran kind of a Monte Carlo or 1,000 different simulations, randomly selected historical 10-year periods of the S&P from 1980 to 2020. Think of the dotted line as the performance of an FIA in each and every single one of those simulations. Okay, our research found with the distinct design of our FILA, we actually outperformed an FIA 80% of the time, providing higher upside potential. The evidence of this research, I'll tell you, it cemented our thought process that with this product, it's not just another FIA, it's not just another custom index, it's not just another growth product. We believe what we have here is truly a brand new product class. Okay, so now the moment you've been waiting for, the rates and how this product works. So we'll reveal that now. So when you allocate in this product, we've just added one more step in the process compared to a normal FIA. Step one, pick your crediting strategy, just like you would with an FIA. For simplicity, we've just narrowed it down to two options. First is an S&P point-to-point, annual point-to-point with a participation rate. Your second is an S&P annual point-to-point with a cap rate, okay? Now, here's the difference though. You have to pick one or the other. You have to pick par rate or cap rate, not both of them. So you got to be 100% into one of those index options, okay? Now, we're introducing a second step in the allocation process, and that's where your client or the owner of the contract selects their floor or their maximum risk appetite. We're actually calling it a track. So there's 4 track options: 0, 2.5, 5, and a 10% track. A 0 track means the client is not willing to put any of their gains at risk, exactly like an index annuity. 10% means the client's willing to risk 10% of their gains or their tracking value, which we'll talk about shortly. You do have to pick one of these tracks at application time, at issue. And that's to automate this a little bit down the road to make it easy for you. Now, here's an important point. Everyone starts at the 0 track because there's no gains at risk at that point. Now, you can choose to keep that same track each and every year. We call it the set it and forget it method. Or as gains become available to the contract, you can actually choose between those multiple track options. And that is really the secret sauce behind our product and how we can offer 2.5 times what's out there on a typical FIA. So here you can see some of the rates. So let's say we went 100% into the point-to-point with cap option. You picked, let's say, the 10% track. You would start with a 3.5% cap to the S&P. Very similar to what you're going to find on a lot of FIAs. You're going to start basically at the same point. Then as gains become available, you're going to work your way up to a 5.5% cap, a 7.25% cap, all the way up to an opportunity to earn 11.5% of the S&P 500 each and every year. Conversely, if you look at the par rates, you would start with a 26% participation rate to the S&P, and then you'd work your way up to a 37, 47, all the way up to a 65% par rate to the S&P 500. So really exciting growth and upside potential. And remember, we're not risking a penny of the client's premium. So those initial choices that you made on application, those can last the life of the contract. We call it set it and forget it. You could choose that S&P 500 cap option and the 10% floor, which is 11.5% cap down the road. My contract would then automatically move up the track as gains become available. Okay, the advisor, the client, you don't have to do a single thing. And I've got an example on the next slide. It shows exactly that. Or, okay, instead of leaving everything as is, the client and you, the advisor, can adjust their crediting method. You can move out of the cap and go into the par, switch out of the par, go into the cap, exactly like an FIA. In addition to this, okay, you and the client can choose to adjust their track. Let's say they've got 5% in gains available. There'd be 3 floors to pick from, 0, 2.5, and 5. That ability to dial up or dial down your risk is what makes this so unique. So why would somebody change their track? Maybe you and the client have a different outlook on the market for the year, or tax is a big thing, tax regulation. You know, that's on a lot of people's mind. You know, just changing circumstances and events in the client's life. So we think that the 10% track option will be most popular because it provides the highest upside opportunity. So, you know, maybe the client has a different risk tolerance, right? In my humble opinion, this product creates an even bigger opportunity to get in front of a client at anniversary time than any other FIA product, given just all the different levels of upside potential and downside exposure. And then when you think about that, you know, there's a ton of opportunities that are present when you're able to get in front of a client after a period of time's elapsed, right? You know, what if they've changed jobs, there's an abandoned 401k that they need counsel on, or they've got a CD that's matured. Maybe they're a part of a new friend group and there's referrals for you there. Hopefully, with the unique design of this product and getting in front, almost, you know, wanting to get in front of them each and every year to talk about these different options, it allows you to have more sales opportunities as a result of that design. So that's kind of the marketing spin on it, at least. So a graph of an index annuity, it's like a set of stairs normally. It goes sideways, it goes up. The FILA can look a little bit different than your typical upward staircase. So in this example, the client picked the 10% track. Okay, we have a little more conservative cap of 10% illustrated here. This is from 2010 to 2020. Our 100,000 premium grows to 160 after 10 years. So let's dive into some of the specifics. You see 2 different colors and values in purple and green. Purple is your account value. Think of that as your premium. It's 100% protected. Okay, at the end of the 10th year, that's your walk-away value. The green value is your tracking value. And as you can see, your gains can go up. Now they can also go down, unlike a normal FIA. After year 10, your gains to the FILA are credited to the account value. Your gains are locked in with that new balance now being 100% protected. Okay, so for withdrawal purposes, we actually calculate off the green value. And there's a vesting schedule for withdrawals and RMDs and surrenders. I'll show you that. It's really generous. And we'll talk about that shortly. So bottom of the slide, you can see some of these numbers. So let's take a look at it. So years 1 and 2, we've got no gains at risk. Okay, so our $100,000 remains the same. Year 3, I've got 3.8% in gains. Now there's 2 floors available. We automatically jump from the 0 to the 2.5 floor. After year 4, we have 8.6% in gains. We jump from the 2.5 to the 5. And now in year 5, there's 15% in gains available. We jump to the 10% and we stair-stepped our way to that maximum risk possible. Remember though, each and every year we can actually choose between the different floors or different crediting strategies. But if the client doesn't tell us anything, based on what they selected at issue, we're just going to pick that highest track option available at anniversary. Now, one important distinction to make is that participation rate, for example, works in your favor in both directions. It works inversely. So while you have a 65% upside on the S&P 500, it also would work on the downside. So let's say the market goes down 10%, okay? So negative 10. Because of that par rate, you'd actually be limited to 6.5% of that downside. So that does work in your favor if there's a little bit of dip in the market, just to clarify. So zooming in to the different values and some of these new terminology we're explaining here, the account value is, think of that as 100% principal protection, right? It's unchanged until the end of the 10th contract year. The orange line is our death benefit, and it does offer, based on your tracking value, also partial index credit. So if the market's up halfway into the year 5%, we would make the beneficiary whole and add that 5% to the death benefit. And reminder, we do calculate off that green value, the tracking value for withdrawals. I think one thing I didn't touch on was the different demographics and risk tolerances of clients that we think this product opens up the door for. So think about younger clients in their 40s and 50s that often have a more aggressive and higher risk tolerance. Hopefully, this product opens up the door to conversations with them that maybe they just weren't too excited about the lack of upside potential in an index annuity, right? And they just don't like that design. Maybe this is a chance to get in front of those clients and open up your search or your database of existing customers. And when you're prospecting, hey, this is a new, unique opportunity from F&G. If you like the idea of protecting your money, but you kind of like the better upside potential that's out there, you want more. This is brand new, it's unique from F&G, and it might be worth a look, right? So hopefully that creates a new opportunity for you. So a few quick housekeeping items when I take a look at this product. One, we do issue up to age 75. So that's different than a lot of our other FIAs that go up to 80 and 85 because it's unique and more aggressive risk tolerance allowed on this product by risking gains. 75 is the maximum issue age. 10,000 is the minimum. $1 million without any home office approval. Here's that vesting schedule I explained, which we use for RMDs, partial withdrawals, and surrenders. And it starts at 90% at issue. After a year, 92% of your gains are already vested for withdrawals. After year 7, 100% of your gains are available for withdrawals. We talked about the death benefit. It's based on your tracking value plus any partial index credits halfway into the year. This does allow for 10% free withdrawals beginning immediately, so you don't have to wait a year. And it doesn't generate any chargeback of commission either in the first year, which is nice. So you can pull out 10% as soon as 30 days. 10-year product has a 10% or less surrender schedule in each and every one of those years. And then RMD friendly and has a standard nursing home and terminal illness waiver. That really concludes, the product training. I tell you what, if you really like that, opportunity for better S&P growth, 2 times what's out there, 65% par, 11.5% cap, this could be a product that's worth a look. One quick and dirty and easy way to explain this product that I thought was pretty good is imagine going to the casino and you got $100. You go to the blackjack table and after an hour you win $20, so you got $120. You get up from that table and you start looking around at other tables. You take that $100 and you put it in your pocket. You're not going to touch it. With those $20 that you have, your growth, your gains, you see a table that's $2.50 to buy in. You see a table that's $5 to buy in, and you see another table that's $10 to buy in, right? And that's kind of dynamic at its core. You're taking your gains and you're leveraging those without risking anything of your premium. So I thought that was kind of a quick and easy and dirty way to explain it. Hopefully this is a great, exciting new feature that you can all talk about and offer to maybe existing and new clients. And it's such a different design that hopefully this adds additional value to some of your businesses. So, John, thanks for having me. And I'm going to turn it right back over to you, sir.
Absolutely. Well, Luke, thank you for your time. As I look at this product, I hear all the time producers calling and saying, cap rates have gotten so low in this low interest rate environment and in this volatile market when it's gotten expensive to be able to purchase the options that you guys need as a carrier to create the returns that are available in an index product. This really creates the best of both worlds. It's an opportunity for a client to have a principal guaranteed solution, but also have an opportunity for gains that well exceed the traditional ones found in a traditional FIA without having to put their principal at risk. I want to go back to that and say that again and again. You're risking potential of some of the gains in the contract. And I think you're going to find an audience that is very, very open to this. In fact, as we've had this product roll out, we begin to talk to some of our producers and just share this as an idea, knowing that this product was coming. There was a lot of buzz about this. So think about your customers that are growth focused and looking for an opportunity to get better than an average 3% return on their money, which is, again, much better than what they're getting in a CD, but to have their principal approved and an opportunity to get some substantial participation rates or substantial cap rates. What an opportunity for them to be able to grow their money, knowing that potentially they could lose a little bit of the growth, but the opportunity over time could be substantial. So what I'd encourage you to do is, if you want to see the power of this product, give us a call here at Vision Advisors, 1-800-505-8489. That's 1-800-505-8489. And let us run an illustration to show you the power of this dynamic accumulator annuity with F&G. I think you'll be pleased with the results. And as long as it's presented correctly, and we'll help you with coaching on how to present the solution, I think this is an opportunity for your growth-focused clients to participate in the market in a way they never had an opportunity to participate in the upside potential, but still have that principal protection that annuities have been known for so well. Luke, did I miss anything there?
No, that was great, John. Appreciate it. We might have to engage you on some training on our end. That was great.
Oh man, I would love to. Absolutely. You know, I come from a securities background, and so understanding the problems and the frustrations of people that invested in a variable annuity or invested in a mutual fund and saw that lose money and saw that principal go away, that was a problem. Think about all of your clients that you worked with that in 2008 had money in a 401k, and all of a sudden it became a 201k when we saw the market correct. With a solution like this, great upside potential, but that downside risk protection that, based upon a recent study by Canex, 71% of consumers are concerned about that principal protection feature. So be aware of that in your conversations. And now you've got a solution through Vision Advisors and our partnership with F&G to bring that to you. And by the way, this is a limited distribution product. It's not available with every IMO in the country. So this, again, is a unique opportunity for you to work with us and us bring something of value to you as an independent producer. Hey, Luke, thanks for your time. Anything you want to share as we wrap this up today?
No, just appreciate the time, and thanks for your business. Well said, John. Thanks again for having me.
Absolutely. We appreciate our relationship with F&G. They've been a tremendous partner for us over the years, and we value that relationship. And Luke, I appreciate you taking time out of your hectic schedule to jump on and let us get this recorded so we can get this message out to our producers. So, ladies and gentlemen, one last call to action, 1-800-505-8489. Give us a call. Let us run an illustration. Get what you need to have an opportunity to put this tool in your toolbox. I'm John Tier, Vision Advisors. On behalf of Luke and F&G, thanks for joining us, and have a great day.